Infrastructure reported a good set of earnings for the third quarter. The revenue saw a healthy jump, while margins also expanded. Arun Maheshwari is Joint Managing Director and CEO of JSW Infrastructure, is joining in right now to talk about the earnings and how the picture looks ahead. Mr. Maheshwari, great to have you with us here. Good morning. Thanks for your time. Could you talk to us about the big drivers behind the volume growth and the top-line growth that we've seen in the third quarter? The newly acquired assets have started contributing to the overall revenues. To what degree? Can you provide us with some numbers?
Acquisitions, what you have seen, has not really contributed in this particular quarter, which has recently gone by, because those assets were just about 10 days or 7 days old. So that addition to the volumes are very insignificant. The large part of the volume growth and the revenue growth has come in from the utilization at our Paradip assets, which is iron ore and coal assets, and some decent volumes pick up in all other ports. There has been a significant increase in the utilization of the coal terminal, which is just about the third year of operation now, and iron ore, which is the fourth year of operation. So these are the new terminals which were added about a couple of years back in our portfolio. And a very modern terminal, the utilization has started growing right from day one. And this quarter, we have seen significant jump in those volumes as well. So that has really largely contributed to the volume growth for the quarter.
So what was the proportion of the third-party volumes in Q3 and what was the intergroup volumes, if you can just help us with that?
So the third-party growth of cargo is a combination of liquid containers as well as bulk. If I had to look at the bulk side of it, iron ore and coal, as I said just now, is all third-party largely coming in from Paradip. Container terminal, which is relatively new in our portfolio, is just about 1.5 years of operation. It has been going steadily going upside. So it has added to one more volume. Liquid, as such, we didn't have anything in our portfolio. So I don't see any growth getting contributed from liquid side in this quarter. However, the coming quarter, you will see liquid coming in because our acquisition of Fujairah Oil Terminal, which is just about 10 days old as of 31st December, the full quarter impact will come in this quarter. So you will find a liquid contributing our growth journey from this quarter onwards.
All right, so new assets have been acquired in quarter 3. So what will the growth be in quarter 4 on a year-on-year basis? And how much will they contribute to your growth? Give us a sense of FY24 guidance.
New assets which we have acquired, they have been running successfully almost on 90% plus capacities. However, if I have to look at PNP as a port which we have acquired, which is a 5 million ton capacity port, it has a approval of up to 19 million ton, 19. So once we have stepped in, now we would like to mechanize, modernize, and we would like to scale up that port. So the potential for that port is up to 19 million ton as we talk today. So we will have to make a layout of the Capex plan and the more marketing of that port. By virtue of this port will grow further from here on. Coming to the oil tankers terminal, that is running at 90% plus capacity utilization. However, there is an additional piece of lease land which we can acquire over there, and we can build additional capacity over in that terminal, which we are assessing now. How do we do that? So these are the two upsides available on these two acquisitions, what we have done, other than what the synergy we can bring in from our existing assets in those terminals. Coming to the quarter 4, typically in our industry, quarter 4 is strong as compared to last 3 quarters because the quarter 1 and quarter 2 are generally monsoon in India. And quarter 3 is slightly better. And quarter 4 remains the robust one because of the large contracts, take or pay, and everything gets built into the quarter 4. So the volume, what we have seen in the past, has been generally better in quarter 4. And we don't see any significant change from that trend in this year also. So I think quarter 4 should remain good.
Mr. Maheshwari, let's talk about the Keni and the Jatadhar ports which you recently secured. What sort of development Capex will we see there? Will you have to do? And by when will these sort of become, the expansion of the ports be complete and they start contributing?
Keni port, we just signed the concession agreement in the month of November last year. And we have already started working towards the environment clearances and other related clearances for that port. Hopefully all the clearances should be coming in another 6 months or 1 year time kind of stuff. and thereafter the project construction will commence. Typically, it takes about 3.5 years to construct a port. So from today, if I have to look at it, about 3 to 4 years kind of time frame I can say for Keni Port. And the total capex outlay as projected is about close to 4,100 crore rupees for that. So thereafter, the volume will start picking up over there. Coming to Jatadhar Port in Odisha, this is the concession. All the approvals are in place in that case. The concession agreement is likely to be signed within the next 4 to 6 weeks by JSW Utkal, which is a subsidiary of JSW Steel. Once that is done, then we'll apply for novation, and thereafter we'll start constructing the port. So given the time frame and what we expect, it should be again another 3 to 4 years time. We should be running that port as well. And in that port, we expect to spend close to about 3,000 crore rupees. So total both port put together close to about 7,000.
All right, sir, we have to ask you this final question before we let you go. Our team had reported your intention to acquire Navkar Corp recently. Could you clarify your interest in the company and also your inorganic growth strategy from here on?
See, the thing is that, being a big player in this industry now, and with an appetite to grow with a strong balance sheet with us, we keep exploring multiple opportunities, and many opportunities keep coming to us. Not necessarily that it is one or the other opportunity. So I would not like to comment on any specific opportunity as of now, but we do have an intention to get into that last mile connectivity space and all. That's why we have purchased a CTO license, and we have been exploring several other opportunities wherein we can differentiate from the existing only port operator to a service provider till the last mile connectivity. So I would like to rest my comment over there rather than getting into any specific opportunity which we are exploring or not. As the time passes, probably we can discuss more about several other opportunities which we are looking at today.
Okay, we'll let you go on that note. Thanks a lot for joining in. That's JSW Infra. Let's